Yo, what's up, everybody? It is Thursday, July 31st. Summer's flying by, huh? Next month, August, I'm going to Montana. Pretty excited about that. Going to be doing some hiking and camping, so that'll be cool. So yeah, I hope everybody's having a good summer. So the market was down today. Actually, a reversal from, it was up pretty good in the morning on strong earnings. Earnings, like, it's no surprise to me that earnings are strong for the most part because you got strong fiscal flows. I mean, that's just going to translate into strong corporate earnings. I mean, those flows, a large part of those flows just flow to corporate earnings. Some flow to savings. But I mean, people get paid, the economy grows, profits go up. I don't even bother paying attention really to these quarterly earnings reports because I just know, like, if the flows are strong, I know that most companies are going to beat their forecasts. That's why most of the time these earnings seasons are always positive for the market. I don't pay any attention. Anyway, I think what I saw in the AAII survey, that bearish sentiment among individual investors fell to the lowest level in 5 weeks. So when I saw that, I thought, you know what? Maybe they're a little ahead of themselves. Maybe they're a little bit too confident. Could see a pullback here, but that's it. I mean, it's just based on sentiment. Sentiment is not the fundamentals. The fiscal flows are what counts, and so this will turn around. We got a big flow day tomorrow with Social Security and first of the month payments. So that's going to be strong. And then August 15th, like I said, quarterly interest payment. So we're in this environment right now of a very strong monetary condition, like for the next 2-3 weeks. After that, we'll see what happens in the new fiscal year starting October 1st. But right now, we're in a very strong monetary environment. Okay, tomorrow we have July job numbers. That's another thing I don't pay attention to. Like, I don't pay attention to the Fed meetings. I don't pay attention to these numbers that everybody gets all bent out of shape about, like the job number tomorrow. And to me, it's just like, when I look at the reaction to these things, it always cracks me up because, like, if it's a strong number, they automatically want to sell the bonds. They automatically think there's going to be inflation. I mean, this goes against the whole concept of capitalism. It goes against the whole concept of what an expanding economy is, where it's employing more people. Higher economic output means more output of goods and services, a greater supply of goods and services. This knee-jerk reflex reaction that an expanding economy automatically and necessarily means inflation is completely ridiculous. The only way you would have inflation in that situation is if the economy could not produce more, if it was hindered in some way, not enough resources, not enough productive capacity, not enough labor, or maybe all three, a combination of all three. And, a lot of transfers, a lot of money going into the economy, and there's just not the productive capacity to deliver the goods and services. I mean, that's the essence of capitalism. So when I see stuff like this, it's just stupid. But, this is central banks based. This is the playbook of central banks. This is the orthodoxy that they use. That they automatically assume that higher economic activity poses an inflationary threat, which is completely ludicrous for the reasons I mentioned. But this is their knee-jerk reflex reaction. So in that regard, I pay attention to it. Like, is the Fed going to shift its rhetoric? Some people even said, like, in the meeting on Wednesday, not the meeting, but the press conference, that Powell shifted his rhetoric a little bit to say, you know what, we're still leaving the door open for rate hikes, like he's really pushing it in Trump's face. Trump didn't say anything after that Wednesday press conference. Powell shut him up, man. Some of you are asking me, like, Mike, why, why are you so concerned about the rate? I'm not concerned about the rates. What I am concerned about is the dishonesty. Let me make this clear, because some of you asked me some questions in the comments like, Mike, we appreciate what you're telling us and everything, but why you all hung up on the rates? It's not about the rates. Like I always say, like I don't care one way or another, because I understand what rate adjustments are, okay? But I don't like the dishonesty. I don't like when Powell comes out and says, the Fed is going to be data dependent, and then we get, a string of data, report after report after report after report showing no inflation, moderating economic activity, and then he's still saying, yeah, but it's going to happen. It's going to happen. I mean, that's not being data dependent, number one. That's not his job to predict. First of all, the Fed has probably hundreds of economists employed over there, okay? So they do internal work, but it's not, and I'm sure among that work, I would bet anything, it's not all aligned and, everybody agrees. Because, among economists, like they say, you could have 5 economists and 6 different opinions. It's not his job to go out there and say, look, to completely ignore, to me that's very disingenuous, completely ignore the data, yet telling people with a straight face, we're going to be data dependent. That's the part that pisses me off, not the rates necessarily. I couldn't give a shit about the rates because I understand what rates are. They're fiscal operations and it's price setting. Price setting and fiscal operations. That's it. That's how I look at it. And whatever the rate is, or whatever the policy, direction is, up or down, I know how to play that. That's not a problem for me. But I don't like dishonesty. Just in general, I don't like dishonesty. It doesn't even have to do, not necessarily that I'm just looking solely at Powell. I don't like dishonest people. I don't like disingenuous people who say one thing and then do another thing. I don't think that's good behavior. I don't think that speaks to a person of high character or somebody who has integrity. I just don't like that. All right, that turns me off. So that's where my criticism is coming from. It's not about the rates. I mean, when the rates were going up, for those of you who were following me, when the rates started going up in 2022, I told you what was going to happen. And I was there was absolutely nobody in the world who was saying what I was saying. And I was right. And not to pat myself on the back, but it comes from an understanding. And I gave the exact date. I said we hit the inflection point. I think what it was, October 16, 2022. I said we hit the inflection point where the negative impact from the rate hikes in terms of that, discounting future cash flows, accountants and financial analysts use this stupid formula, which I think is flawed because it doesn't take into account the fiscal transfer aspect. It's really a formula based on loanable funds, which is, we don't operate under loanable funds. Loanable funds is a theory where the amount of funds available is finite. That would be a theory, or that would be a system that would apply, let's say, on a gold standard or on a fixed exchange rate or something like that. It doesn't apply to our system where we have fiat currency. So that formula, I don't even pay attention to that formula that all these financial analysts use to evaluate, the value of companies or future cash flows and stuff like that. I think it's bogus. But I used it anyway because I was able to figure out, the discounting effect from that, from those rate hikes, and then how much interest income started to be transferred into the economy. And I saw when the interest income overtook the subtraction from that formula, that was the turning point. See what I'm saying? So it's crazy, man. This is the playbook that they operate out of. So tomorrow we're going to have that job report. The ADP job report, I think it came in a little bit better. I think they were looking for a 77,000. It came in at 105. But for some reason, the ADP report and the Labor Department report, those things, they never jibe, man. They never, ever jibe. Anyway, it was something else I wanted to mention, but now I can't remember what it is. It was a central bank thing. Anyway, I'll remember it. Maybe I'll do another video later. But I wouldn't worry about today's decline. You know, we got a very strong monetary environment coming up in the next 2 to 3 weeks. It's going to be positive. The Dow's going to make a new high. You know, the other thing about, I tell you guys in advance, and I lay out the reasons. I'm not one of these guys who say, you know, like these debt doomsday guys who are constantly saying the same thing, like, oh, you know, one day it's going to crash. One day it's going to happen. You just wait. We're getting there. We're getting close. I don't do that to you guys. I tell you specific things based on how things work. And the other thing is, I don't, you know, kind of make a generalized statement and then after something happens, go back and try to fit it into my general, you know, like, I really told you that, but you know, you didn't. There's plenty of people who do that. See, I told you that when I talked to you a couple of weeks. No, you didn't. You gave us a generalized thing. I mean, I tell you, I give you dates. I say this is going to happen, that's going to happen. I give you flows. How can I be confident right now? Because I look at the flows. Like a lot of people might think, uh-oh, this is the top. We better start selling. On what? Based on what? Because your line, some line got broken on a 60-minute chart or something like that. I mean, it's, you know, that's the other thing. Like, remember back in, what was it, like April, back in May, I guess, or about March, back when we were having that big drop with all the tariff hysteria. And what was it? And what were the papers and all the online posts were about? And what were they talking about? The idiotic CNBC and stupid Fox visit. The death cross. We had the death cross. Well, a bear market, officially, it's 20% down. People sell on that shit. That's garbage, man. And now they got the golden cross. Maybe we should sell on that now. The death cross. And it's 20% down. That's the official definition of a bear market. So what? They put that out there. And all these stupid people who, by the way, choose to remain stupid, in my opinion. And I'm sorry if I'm being harsh, but like, if you're one of them and you just, you know, you're sitting in front of your CNBC or you're reading freaking Zero Hedge or something like that, and then you see that garbage, and that's what you do. You call your broker or you go on Schwab or TD Ameritrade or whatever, and then you act on that. I mean, you're an idiot. You don't want to improve your situation. You don't want to learn. You don't want to be informed. You don't want to have any knowledge. You have no discipline. You have no self-control. I don't know what you're doing. But anyway, you know. Yeah, I can't remember that other thing I was going to talk about. Something about the crazy monitors, man. It's a mental illness. I'm telling you. And everything runs off of that. Not runs off of it, but everything is viewed through that prism. Everything is viewed through that. And it's even a wrong understanding. It would be one thing, if it was a correct understanding of monetarism and applied correctly. But it's literally like a set of principles that everybody has embraced, which they don't even understand. And then they lay that over the economic landscape as some kind of a chart or a guidance system. And when that thing tells them to go forward, they're actually going backward, and vice versa. This is really what's going on. And then you have a whole entire information industry, including the TV shows, these stupid shows and rag sheets like the Wall Street Journal and stuff like that, and Barron's and Market Watch, and Yahoo Finance, where they don't know what they're talking about, and the street.com. I used to write for them, I think I still have some of you guys are maybe subscribers going all the way back to when I was writing for them, and then they kicked me off. They kicked me off because I was doing MMT stuff. They kicked me off. I know I still have subscribers from who found out about me from thestreet.com. And thank you all. I mean, you guys have been with me for what, like freaking 9 years already. So, I mean, watch and read that stuff at your own risk. Yeah. Damn, I wish I could remember what that other thing was. Anyway, if I remember, I'll come back on. I'll do another short video. That's it for today, folks. Please like and subscribe. Don't forget, go to my website, pitbulleconomics.com. Sign up for a 30-day free trial to MMT Trader. Bye.